and share the screen, right? Great. Good morning, everyone. I hope you had a great evening, great morning so far, and ready to trade that market. No hat this morning. You're right. Yeah, you can see my my hairs going all around. I'm due. All right. Rainy Pennsylvania. Good morning. Morning to from rainy Quebec City. All right, so let's start with the market first, as usual. So my routine starts with TradersLab, the TLMM dashboard. So once again, let's keep it simple. Despite what you can see and hear on X or anywhere else, and despite what you can think happens after a downside reversal, that's only one day, and that one day of reversal, of red action, of weakness, is actually taking place above a rising 21 DMA structure. So you have that base breakout, you have that kind of failed breakout attempt, second mouse get the cheese type of breakout, nice move, 2 legs higher, and now we're just a bit extended, and that market pulling back, not even to the 21 DMA structure yet. So far, just a one red day within an uptrend and normal reaction. So the market won't go to the moon straight up. An uptrend won't sustain itself by being green 43 days in a row, right? That's not how the market works and not how the market moves. So you have to accept those red days. You have to see them as opportunities when they happen in a strong market, and you have the clues that the market is strong, supported, and your thesis is that the market can go higher. And when I see a big base breakout like we have on the Qs, like we have on Nvidia, VRT, name it, on QQQE, on QQQ, then my brain shifts in, okay, we have that breakout, we have that initial move, and then we're getting that first pullback. Then my mind is to see this as an opportunity for a continuation into a larger uptrend. All right, so yes, so that's price wise. Then Brett, the summation index kind of took a hit yesterday due to that. So it was a minus 60 GDB score. So, but the last few days, the green days were pretty weak. So we didn't see kind of the usual 60, 70, 80-ish GDB rating. So that's why when you have a decent weekday, then you're close to flip on the McClellan, because there's not a lot of strength in the average, right? So we'll have to look this today. If weakness continues, then we might have a hook down. But when I look at the short-term breadth being almost already oversold, that's why yesterday I kind of executed and increased my exposure, because we're already almost stretched to the downside on the very short term. So maybe we need a bit more selling today or in the next few days, and I'll see if my new positions are holding up. But yeah, so far I'm still seeing this as an opportunity. All right, so credit spreads. That's why that's where we'll have to be very aware today and look closely how it goes. Either that it was the spike that we needed, or it's kind of the initial red flag of a potential regime change on the credit spread. So we did break out of that tight wedge. I would have preferred to see it on the downside, but that stress test came with that spike. So do we reclaim the daily structure from here, or we reject it? So pretty key area right here, right into recent swing high. So that's a decent spot to hold. And if we see a breakdown, a downside reversal on the credit spreads, that's really back to risk on market. And same thing for the VIX, right? The VIX is still right in the recent highs. Structure, so do we reclaim that structure and have to test that 20-ish area, or we finally saw that last spike and we break down from here, which would be another good risk on indicator? But if we spike on the credit spread, if we spike on the VIX, if my new positions are not working and stop me out, you will see me being a bit more defensive, cut down exposure at the end of the day, and just protect my downside and protect my gains. Not touching my runners, but the stuff that is not the risk, then might have to go, right? QQQE, like we discussed. So that's why I referred by the big breakout. So we have that big base breakout. We were short-term extended. We were at 3 times ATR from the 21 DMA, around 5 times ATR from the 50 DMA, the 10-week moving average. So yeah, market was running hot. All we have right here is a normal reaction from what I see. And yeah, how far we will need to go. Maybe we follow through today and we have to retest kind of this structure right here. And we have the recent highs as well. So that 101, 102-ish area would also kind of give that 21 DMA structure retest as well. So that's a logical place to retest. Look for that structure to be retested today if we have more weakness. But if not, then if we just consolidate, and that's also a possibility to kind of just tap it, make an inside day-ish, and then just continue from here. That would be kind of the ideal scenario to prove that the market is really, really strong and just needed some short-term breather. And same type of action on NASDAQ, right? We're retesting that range top structure. We're still making a higher low here. So look how it goes today. That's kind of the pivotal point where do we hold that structure and able to reclaim that recent swing high pivot, which would reconfirm the uptrend. It potentially see momentum coming back into the market, or we break that micro uptrend line and we need maybe to retest a bit further, like that reversal pivot, and that would be the 21 EMA retest as well. So that's another scenario if we have weakness today for a potential support area. All right, so let's look at the portfolio. Once again, GEV, opened that yesterday. I really like the larger setup. I like how the group is potentially setting up as well. We have that higher low structure, potential higher low structure being built. We have that shakeout on last Friday, which yesterday proved to be a potential higher low, micro higher low structure on the right side. So that's kind of the micro pattern within the larger higher low structure pattern. So that's what I like to see. And yeah, playing the daily reversal here and the 21 EMA reclaim, I was a bit on anticipation, and I like to do that to get really tight risk. And I, as explained in the last few days and weeks, the market likes to gap up and kind of leave you in the dust with those kind of setups. So you're either in trying to play the tight action on the right side, position early in the base, in the range before the move is done, or you're there trying to chase. So right now that gap is not that much, so you can still look at the reversal pivot retest for an entry. But yeah, nowadays I prefer to be a bit on anticipation, and when that gap happen, then I'm actually trimming into strength. Celestica, so CLS, I like how it builds. So we have that same pattern, right? So look how it moves the same way. That's pretty interesting actually. So you have that nice uptrend, that base, that shakeout, that second shakeout slash higher low, potential higher low, and then from there it goes. So do we have the same thing here? That's my thesis. Well, sorry, that's what I'm playing personally, and that's why I opened the position yesterday. But if you're not in, then certainly that the reversal pivot, so yesterday's high pivot, would be a great place to initiate and play CLS. A-Lab, so yeah, I added to my position yesterday. So I had my runner, now I added a full position, and typically playing my playbook, right? So we have that 21 DMA structure reclaim and backtest. So from here, what I expect is either some sideway action to build pressure. So I'm not in a hurry to see that work right away, but the final confirmation will come from yesterday's high pivot, so the daily reversal pivot. That's what I want to see, a reclaim to really confirm the setup. MP, so that's another one in the focus list. So in the focus list, we have GEV, and that's why I explained those setup a bit more this morning. We have still CLS, MP. So MP is, let me just turn that like that. All right, so we have that base, right? We have those higher low structures. So good to see that on the right side of a base. Now we have that 21 DMA structure reclaim and retest setup. So yesterday we tried to reconfirm the trend with that daily reversal reclaim, but we came back in with the market. Overall, it closed not green, but pretty flat. And we held the 21 DMA structure. We held the range of the last 2 days. So that's pretty strong, and that reversal pivot is still playable to reconfirm the trend. So that's still one of the best setup I see in the market right now. Huge RS, nice base, right in the weekly structure. So that's your leader trying to consolidate right here. So you want to be in those. Tesla, still flagging, a bit weak yesterday due to some news about the new Model Y. But yeah, I de-risk that position as long as it stays above the 21 DMA structure, no worries. Then PLTR is also in the focus list. All right, so building a very nice cup and handle, right, with a shakeout on last Friday. Really like that setup. It was lagging, not showing a lot of strength lately, but has Kulumaji highlighted yesterday. It's showing a lot of RS since that shakeout, and we tried to reclaim that inside day high pivot for the daily reversal, but came back in with the market. Overall, we're holding the daily structure. So really look at that handle breakout here for potentially a new uptrend starting. So when I talked about the market a bit earlier at the start of the session, and I was explaining that look for those big bases, those bigger patterns that will give you clues for potentially the market being in a larger uptrend, something bigger, and those kind of setups in the leading names just give you some conviction that the pullback that we saw yesterday is potentially just a short-term shakeout, digestion, just the market cooling off, and there's something bigger in play here. Second leader, so Robinhood. Whoop. So nothing to do here. We're holding the recent swing high. Honestly, this needs time to build, to flag, and very similar to Tesla. So don't be surprised if Robinhood just flags away for a few days and weeks. That's my mindset for constructive and potential scenario for Robinhood. But yeah, obviously we can go retest the 21 DMA, or we can just continue. We don't know. And that's the right mindset to put yourself, just to observe what could happen, build yourself some scenario of what is normal, constructive, and if action is outside of those constructive scenario that you built yourself, then you have a red flag and action must be taken. Okay, Shopify. So we have that larger base breakout, right? We were running hot. So right now we have a very normal and constructive pullback. Even if we pull back a bit further and retest that structure, or even shake out a bit lower, this is still normal price action. Oklo, nice action yesterday. So we rejected that recent swing high. And to be honest, I'm kind of expecting some sideways action from here. That's the way I see this. We held the gap. So that's good action, but let's see how it builds. I'm not getting my hope too high to see a clear breakout right away. We might have to maybe build another higher low on the right side. But yeah, it's acting good. Still trailing the 21 DMA structure. So for me, there's nothing to do. And now comes the names that will give you a bit of clues and feedback about how that market might just be a short-term kind of backtest and shakeout. And I like to track my names once again to have that feedback. So if you look at VRT, for example, so you have that big base breakout, right? So multi-week base breakout. And what you have right now, just like Shopify, we have a base retest. So that's a classic breakout and retest setup. And that's very normal. That's healthy to retest those structure. So you have this action in VRT, you have this action in snow as well. And you have this action in NVIDIA as well. So that's when you start to look at how price moves, how your positions are acting, or the leaders are acting, that you start to build yourself kind of conviction of what the current action is. Is it healthy? Is it constructive? Is it a red flag? So if we start to see, so right now I see this as a backtest, but if we see NVIDIA start to break down and undercut the daily structure, same thing for snow, same thing for VRT, and you start to get those red flags in your position and in your universe, then you start to pile up those red flags, and then you start to think more defensively and reduce exposure, on and on and on. So it's always a game to watch for the clues that the market, your positions, your universe list, the leaders are giving you, and acting on it as you gain information, either intraday or day to day. AMD, nothing to do. We have an inside day here, so pretty strong action so far on that gap up. Honestly, I don't expect this to run right away, but maybe flag here for a couple days. Warner Bros, nothing to do. And TEM still on that larger breakout. And we basically had that range breakout and retest. I would look at the daily reversal for a continuation higher from here. So good action as well. And the last name in the focus list, and after that we'll go with the Q&A, is AVGO. So AVGO, you have that base breakout, small pullback, higher low, earnings reaction, new high, pullback and delayed earnings reaction. So now we have a higher low structure on the right side, shakeout below the daily structure. We're retesting and holding that earnings, that pegged low. So there's a lot of confluence of potential support, seeing that higher low as well. So that daily reversal today, if we reclaim that, would be a really good confirmation and spot to initiate that trade. All right, so that's what I see market-wise, portfolio review, and the focus list. Now the game plan for me, so obviously yesterday I went away and increased my exposure. So I'm not looking to increase my exposure right away at the open or this morning. I want to see how the market will react. I'm still not sure that we will see strength right away. I'm kind of expecting maybe some weak action again today, some further selling to retest that range structure on QQQE. And yeah, I'll just assess if my new position are able to get their risk, if they hit their 2R targets. If they do, then I might look to some additional exposure, but I'm already pretty aggressive here, so I don't want to push too much. But yeah, if I decide to just add a bit more risk, if I'm able to de-risk those positions, then I will go for AVGO. All right, so let's go with the questions, guys. So Chris, hey Alex, if there's time today, can you please give your opinion on Qualcomm? I have some November. I'm not an option expert, but I can talk about the chart, no problem. Yeah, I think it looks better on the weekly here. Yeah, I see no problem. I see that's potentially kind of a stage 2 breakout that we had here. And right now, yeah, it had a 1 week pullback. This week we weren't able to follow through. Maybe it just need to retest that base area and find support in the weekly structure. But yeah, overall, that's still a very strong setup. I would play this on the longer time frame as well, based on that weekly chart. So nothing wrong here with Qualcomm. I think it looks good. And again, I don't have a clue about options, so I can't comment on that. So Joby. Yeah, it's they announced an offering yesterday, right? So that always sucks, right? So I know I had the question last night, and all I can say, guys, is it's based on my system. What I would do. So there's a lot of factors. How do you do on the year? How do you do on the month? Do you have cushion on the position? Where did you enter? Did you trim already? So on and on and on. Do you have other positions that are de-risk or everything is at risk? So there's so much questions and questions and factors in your decision making that I cannot just say, oh yeah, you do this or do that. So based on my system, so the entry and what I shared in the focus list was that 1638 pivot, right? So if the entry was around here, then you have your entry, probably that you already de-risk the position, so you trim 1/3 or a quarter. And what I would do is follow my system. So yeah, it sucks. We have a big gap down, but you have cushion, you have de-risk the position. So even if you take, if it undercuts the 21 DMA structure, then you're at break even because it's de-risk. So right now the stock is retesting that base and range structure. It's retesting the 21 DMA structure. It's still above entry. It's still above that reversal pivot as well. So I would personally wait and see how it goes during the session. If it opens and craps and close below the 21 DMA structure, then I would be out. And if not, maybe it would even provide some opportunity to add to your position later this week. But that's what I would do. That's not investment advice. Which was a gap up in the focus list. What do you mean? What do you mean by which was the gap up in the focus list? I'll go to the next one while you type. So can we go over ANET, please? Want to understand your rationale for... Yeah, ANET is... So why I closed ANET? So sometimes you just close exposure because it doesn't go as you want, or just lagging, or... There's no problem to close exposure, guys. You won't miss the next 250% runner just because you close a position, because it don't go your way. Just accept the fact that you play around in your portfolio, you go for what is showing the best relative strength, what is setting up the best, and just reallocate your capital of where you think you might catch the best momentum, right? And right now ANET is not showing that to me. So we had that breakout, we had that retest, and right now it's so choppy. That's what I don't like. We had right here, it's so choppy we don't even see those drawings, right? So so right now, right here, we had kind of that wedge breakout. I thought it would go right here, but it was slammed down. I was patient with this, held the structure, inside day, breakout attempt. And if it would have kind of stayed strong above the 21-day MA structure, stay strong just below the range top area, I would have kept the position. But now that it just slammed back down into support, and that's too big slam down on the right side, it just put me off. And yeah, so I decided that there was better stuff, and I don't care to miss the move on ANET, because I feel that there's better momentum elsewhere. All right, net. Net actually looks like ANET. Yeah, that's choppy, but if you look at the weekly chart, it looks much better. It was in Focuslist this week, so I think we have a better pivot to play this right now. So 222.22. So you play yesterday's high pivot for an entry. We still have that that daily structure build up, that pullback, that base right here. We have those higher low structure, and yeah, if we can reclaim that high, we also have kind of that wedge breakout. So you enter a bit on anticipation with that reversal, and you can have a nice move on that base. Ah, Banu, no. Why a short here? So you short if it breaks here. Flip that brain. Is the market above structure? Is breadth expanding or contracting? If market is above structure, if breadth is expanding, flip that brain. Long only, long only. All right. You were going through the focus list and I saw a graph with a big gap up. Yeah, I don't have any name with a big gap up. I think the bigger gap in the focus list right now is GEV. 113%. So yeah, that's the only one gapping up. MP is gapping up a bit more, 167, but that's nothing crazy. Yeah, looks like a Da Vinci painting. ORCL. Yeah, that's a bit like AVGO setup, but a bit weaker. That's why I didn't include that in the focus list. There's a nice potential shakeout here. We did close strong in the upper half. Whoop. There's still that peg delayed, so that earnings delayed reaction. But I don't like those large days, those large range. I prefer to wait for some tightness on the right side, to be honest. And yeah, I would wait a bit for RCL, in my opinion. Hey, Sandy, good to see you, my friend. Good morning. Thanks for joining in. All right, so that's about it for the review. I don't know if you guys have any more questions. Can be trading or system related as well. But you guys love the chart reviews. And you have NIS and Russell 2000 approaching -1 standard deviation as well on the McClellan oscillator. So yeah, and NASDAQ pretty neutral as well. And as a reminder, the NASDAQ, the McClellan summation, so just started to start that uptrend at the 1 standard deviation as well. So that's a pretty nice spot. Right now we have some weakness. Let's see if we hook down, and maybe the Russell and NIS need to pull back a bit further. But yeah, right now it's pretty clear that it's in an uptrend, and we're not overbought or overheated yet. So when I see that the market is kind of in a bubble and is running hot, that's not what I see at all. So you have those bread extension being pretty neutral, even a bit oversold on the short term as well, and longer term is pretty neutral. So there's nothing overheated. Yes, we had great moves in some small caps and mainly AI related and some area like rare earth and gold and those type of names. But overall, the broad market is far from being in a bubble. So yeah, data don't show that to me. We'll see how it goes. But yeah, unless we see kind of the market hit those 2 times standard deviation on the McClellan oscillator and summation, and we start to see longer term breadth extension being overbought, this market is far from being stretched. Hey Pat, good morning. So VST. Yeah, VST is very similar as GV, and I covered GV. That's why I decided to engage. But VST is shaping up nicely as well. So we have that daily structure reclaim and back test, a bit deep and long, but it's still there. We have that first potential higher low structure on the right side as we retest that recent swing low. So we have, and remember we talked about that yesterday, but that higher low on the right side also creates an inverse head and shoulders, right? That's the first sign that you're trying to shift that trend structure. And now you have that daily reversal here that you can play. So really nice confirmation as we reclaim the 21 EMA, the daily reversal for a potential new uptrend from here. So, and we have that wedge breakout in play as well on the right side. So yeah, I like VST, I like the group, and decided to go with GV personally. CRDO reminds me a bit of Rocket Lab last year. Yeah, so CRDO, there was this offering. It's not dead to me. I will watch that pretty close. We're still right in that recent swing low. We're holding that gap and that base structure right here. And what I want to see is maybe some retest of the daily structure, some right side being built up. And you see me there in CRDO again next week. If we do build constructively, that's a leading name. It was it with an offering. Clearly it's weak in the recent days. So for me, I prefer to be out as it might trend below a daily structure, but keeping that on close watch for a re-entry. All right, guys, so 9:25. So once again, game plan for me today, I do have the exposure that I want to test that weakness, that stress test in that still uptrend. I want to see, again, GV, CLS, or ALAB being de-risked at first before I do anything else. If I cannot confirm the strength in those new positions, then it's a clear panda day for me. Otherwise, I might execute AVGO just to top it up. And yeah, but only if my stuff is getting traction, I have a good EC day, and I'm able to de-risk my newest positions. So have a good day, everyone. I see you in the trading pit once again during the day, and if you have questions, don't hesitate to use the proper channels. Have a good day, guys. Bye-bye.